7 p.m. now. Hello, everyone.
Hi,
Welcome
hi,
to Master a Strategy. We are starting immediately. And
Hi,
this now, oh, you can say hi. Hello.
hi.
Okay, welcome,
hi.
everyone. My name is Grace Ele. As you all know, as you can see my name there. And I am your host for today. Nice to meet all of you. I don't know all your names, so maybe before the end of this webinar, I will know your names. So once again, welcome to Master a Strategy, where you will trade smarter and win bigger. You're very welcome. So I'll be telling you guys why we are here. Can everybody hear me?
Yes, we are hearing you.
Okay, we are here to discover opportunities in the financial market. As we go forward, I'm going to be defining the financial market for you. We are going to learn a very simple and powerful strategy. Also, we are going to grow the right mindset for success. One thing we should know is our mindset is very, very important in our trading journey. Yeah, I was talking about mindset. Our mindset is very, very important in our trading journey. And before you claim any form of success, it starts from the mind. So you need to build your mind when you are trading. So today isn't just about learning technical terms, it's about understanding the financial market. It's about understanding that the financial market is one of the greatest opportunities in our time. And in the last 5 years, one of the key ways people have gained financial freedom is through trading, and millions of people are tapping into forex trading. But the difference between success and failure is having the right knowledge, the right strategy, and the right mindset. And this webinar is going to teach you not just the knowledge, but you are going to learn a powerful strategy and you are going to build your mindset. Please, next slide. So yeah, I talked about the financial markets. I said we are here to learn about the financial markets. So what is this financial market that I'm talking about? The financial market is a place where money works for you. It's where you buy and sell currencies. We should know what our currencies are and what they are not. Naira is our currency here in Nigeria. We have the dollar, we have the euros, we have the Japanese yen, and so many other currencies. And the aim for this webinar is to grow wealth. The aim of the financial market is to grow wealth, protect value, and create opportunities. So, in conclusion, what should I define the financial market? The financial market is a place where money meets opportunity. If you don't have money, you will not meet the opportunity. Can you hear me? So in Forex, you buy and you sell cryptocurrency, you buy and sell currencies just like trading goods, but with the goal of making profits. So think of it as learning how to let your money work for you instead of always working for your money. In this present day, in this our generation, one stream of income is not enough. Earning 100, 500K will not sustain you in this present Nigeria. So you need to make your money work for you. And there are several ways your money can work for you. And one of them is trading. And you are very opportune to be here. Please, next slide. So why Forex? You might be wondering, why Forex? Forex is the largest financial market in the world. It opens 24/7, anytime, anywhere you are, and it is it is accessible to anyone that is willing to learn. So as long as you are willing to learn, Forex is open to you. You don't need to have a degree, you don't need to go abroad before you have access to the Forex market. One reason Forex stands out is, sorry, one reason Forex stands out is because it is the largest financial market in the world. I think I said that earlier. Yeah, it is the largest financial market in the world, and it makes over $7 trillion in trading. Over $7 trillion is traded daily. Do you know what that means? It's more than Nigeria's GDP. And unlike many business, Forex opens 24 hours a day, 5 days a week. And you know what the best part is? Anyone can participate as long as you are ready to learn and apply the strategy. I've said that before. Anyone is capable of being a Forex trader. Please, next slide. The mindset for success. I talked about mindset. Hello? I talked about mindset earlier. Napoleon Hill said, before you bet success, before you build wealth, it starts from your mind. It starts from your outright. It starts from what you think about success. So success starts with the right mindset. You need to be patient, you need to be disciplined, and you need to be consistent. I'm trying to build you guys morale to learn this strategy that you're going to learn very soon. You need patience, you need discipline, and you need consistency. Before we even talk about strategies, let's talk about mindset. Your mindset in trading isn't your mindset in trading is very important. Trading isn't a quick money scheme. You need to clean that mentality. You need to take that mentality out. It's about patience, discipline, and consistency. You need patience. You need discipline so you don't get greedy. And you need to be consistent. Do you understand? If you approach this with the right mindset, you not only grow your account, you will grow personally in the way you handle risks, money, and opportunities. Do you understand? Let's move. So motivation, this is just general motivation. I want you guys to, if you're in the room here tonight, learn, apply, and grow. This is the best thing that's happening to you in this month of August. Do you understand? One strategy can change your journey. You just need one strategy that actually works. If you have a strategy that brings in $100 to $200 for you in a week, it's okay. Before you know, you can even increase your capacity to $500 to $1,000 to 5K a week. So being here today is already a step ahead for so many of you. And I want to congratulate you. Grace Eli, I'm congratulating you for being here. Some people only dream, but you have chosen to take this step. So congratulations, and stay very attentive and pay attention as I'll be welcoming Mr. Wilson to teach us this powerful strategy. Hello?
Hi,
I'm here.
Okay, Mr. Wilson is here. Just a little intro about Mr. Wilson so that you get to know him very well. He's an experienced Forex trader. He will share a practical, powerful strategy, and it is such an honor for him to be a special guest here today. So he's not only a seasoned trader, also a mentor who has guided many people. He has helped me so much in my trading journey, and he can also help. So he can also help you in mastering strategies that actually work in the Forex market. Get your notes ready. Are your notes ready? Get your notes ready because he's about to share powerful insights that can transform your trading journey. Please join me. Welcome, Mr. Wilson.
All right, thank you very much, Grace. Welcoming everyone, especially to this call. And this call is majorly going to be for a masterclass where you will learn a very good strategy that will enable you to trade in the Forex market successfully, even as a beginner. I want to believe a lot of us are already registered. So before we start, I'll need us to, because my class is going to be a practical section, even though we're going to be doing a few definitions, what is support and resistance, and all that. So, but the first thing we're going to do is we're going to download the MetaTrader 4. We're going to learn how to download the MetaTrader 4, and because that is what we'll be using for this training. So during the course of the training, for these 2 days training, what we're going to be learning is, firstly, we're going to learn support and resistance. Then after the support and resistance, we're also going to learn what we call the shift candle. And the final thing we'll be learning tomorrow to round up the section will be divergence, either bullish or bearish divergence. So we're going to break all of that down and practically on the chart. So to kickstart this training, let's all open, for those of us who with our laptops and even with our phones, let's first of all learn how to download the MetaTrader 4 from the website. So if you're not registered, please, I'm going to give us just 1 or 2 minutes I'm going to paste the website on the chat box, or somebody else can help me do that. The website to register is www.inveslo.com. That's the first thing you're going to do. Ensure you're properly registered. Okay. So visit www.inveslo.com and get registered. So I'm giving us 2 minutes to do that so that we'll take the next step. So it's going to be a gradual process. While we're doing that, I'm going to also open my, please, if you're on the background, please be muted. Thank you. Or somebody should help me mute everybody. I can unmute myself. So let's all visit the website. Okay, so I'm sharing my screen. If you are fully registered, this is what you'll be seeing. So registration does not take time. Simply input your name, your age, your email, and your phone number, and you'll be fully registered. Once you're fully registered, the next thing you're going to do is, so I said 2 minutes to register. How many of us are registering? Please, if you are registering, just say hi on the chat box. If you are fully registered, just say hi. Then if you are not fully registered and you're registering, say I'm registering. Please let's comment on the chat box. Thank you. If you are fully registered, just say hi. Good. If you are fully registered, just say hi. Nice, nice. So most of us are fully registered. Excellent. Okay, I'm just saying just 3 eyes. So I want more eyes. I want more eyes. Good, good. Let's get more. We'll have a lot of persons on this call, so let's get more eyes, and we'll just go ahead and learn how to download the MetaTrader 4. So once you're fully registered, the next thing you're supposed to do is to ensure that you have verified your account. And the best way to verify your account is to simply click on your profile. Okay. Well, if you're registering currently and you have any issues, you can simply ask a question, and I'll answer that question. Okay, so in absence of no question, I believe most of us are already registered. So what I'm going to do is, we're going to, once you're registered on the platform, on the top right corner, you will see your profile. Okay. And if you are having any issues registering, somebody is on the call that I can easily assist you, or you can meet who invited you to this call, either anybody that invited you to the call, either Grace or Vanessa or myself or Lola, any person, just meet them up and they'll teach you how to verify. So the next thing you have to do is click on your profile, and you see my profile. I believe you are seeing my screen. You click on my profile. This profile is already registered. This profile is already fully registered. If it's not fully registered, all you just need to do is to submit any government verified ID card. Either your NIN, either the plastic or the slip is accepted. Your voter's card is also accepted. Your international passport as well. And last but not the least, your driver's license. Any of these government recognized ID card is okay for verification. Please, if you can hear me, just say hi on the chat box. Somebody is saying they can't hear me. If you can hear me, please just say hi on the chat box. Then if you can't hear me, please leave the call and rejoin. Okay, excellent. A lot of persons that can hear me. Okay, so I'll just go ahead. So once you are registered, the next thing to do is, if you are using your phone, you can go to your Play Store or your Apple Store and download the MetaTrader 4. If Biola, if you're registered already, all you just need to do is to log in log in on the platform, go to the website www.inveslo.com. Okay, Biola, if you're registered already, go to the website www.inveslo.com and log in with the documents you use in starting. Okay, so the next thing we're going to do is you go to the platform and download the platform. If you're using, so you can click on Get Platform. Once you click on Get Platform, we have two options. It's either, or let's say 4 options. Okay, so it's either you have, you're using a laptop for Windows, or you're using a MacBook, or you're using Android or an Apple phone. So whatever platform you're using, we have all of them, and you can download. So for this section, I'm using a Windows phone. So we're just going to click on Download. So once you finish downloading, so if you are on the call, I want all of us to quickly download the platform. Just click on trading platform, click on Get, and download the platform for your device. Okay, just click on download right away, please. Because this is the platform we're going to be using for this training, and it's very important so that you understand what we're going to be doing. Okay, please somebody help me to mute everyone. Please, if you just join the call, you can simply mute yourself so that we'll not be disturbing others. Thank you. While during the course of the training, if there's any question, please do well to ask. So I believe we'll finish downloading the platform. Once we finish downloading, once you're done with downloading, the next thing we're going to do is we need an account. We need an account to log into the platform. So what we're going to do, we go to, still on the website, if you're finished downloading, come back now to the website. Let's all come back now to the website. We'll now click on Open Trading Account. Open Trading Account. Good. Once you click on Open Trading Account, we have 2 options there, as we can see on my screen. We have a live account and a demo account. We have a live account and a demo account. Okay, so before the end of the training today and tomorrow, there's going to be prizes for those who will instantly fund their live account. Okay, and before the end of the training as well. And there'll also be gifts and airtimes for chosen people as the class progresses. That depends on your participation. So quickly, you can either open a live account and fund it. Okay, so we have different account options there. You can just pick anyone. Either a standard account, we have an ACN account, or a premium account. We are funding more than $20,000. But for the essence of this training, we'll just click on the demo account as well. Okay, we're also giving out $50. Okay, it's on the chat box. We're also giving it $50 for 2 chosen, as a giveaway for 2 chosen persons, 2 lucky persons in this call. All right, so this is how you open your account. You click on the account type. So me, I try going for standard account. Then currency is USD. Then I pick my leverage. You can choose either a swap free or a non-swap free account. We'll talk about that later. Then you click on proceed. Now, once the account is created, once the account has been created, all you need to do is go to your email and the account details will be there. Simply go to your email and the account details will be there. Now, once the account details have been sent, the next thing you're going to do is log into the account. So you're going to log into the account. So I'm going to show us how to log into our account right away. So this is my MetaTrader 4. Okay, we're about to start the training right now. So this is my MetaTrader 4, and this is how it looks like. So once I get here, you go to your navigator. You go to your navigator and log in your account. So from here, you can now log in the account. So all you just need to do is right click, you now click on log into a trading account. Okay, that's said. So let's go, let's dive straight into the training section. Let's dive straight into the training section. So like we said we're going to be talking about support and resistance. So let's quickly just define what support and resistance is. For those of us who will be hearing support and resistance for the first time. Okay, so support and resistance is more like the foundational concept of technical analysis. So first of all, we have two types of analysis. We have both technical and fundamental analysis. So support and resistance form the basis of technical analysis. Whether I like it or not, it cannot be avoided. So support could be defined as a price level where buying interest tends to emerge, causing the price to start bouncing upward, while resistance is now purely the opposite of the support. Okay, this is where selling pressure has halted an upward movement, and those levels are often identified by multiple touches on the chart without breakout or reaching or by reacting to psychological price points, like round up numbers. Okay, so these levels could either be identified using pivot points, trend lines, and vertical lines. So reactive levels form directly from observed prices behaves such as swing high and swing low. Then technical outlook for use, like technical tools like moving averages can also act as dynamic support and resistance. So that said, let's quickly go back to our charts and try to particularize what we just finished explaining. So if you have any question while I'm speaking, just simply ask. I want to believe most of us are on our laptop and phones, and we'll be learning how to use we'll learn how to use our support and resistance and our chart as well.
Good evening or good afternoon from wherever you are watching. My name is Olufemi. I believe I'm audible enough.
Yes,
Since
you
you
are.
said you can ask questions. All right. Yeah, you took us through some steps. One is to register, but then you logged in and or you opened your platform, right?
Yeah.
But
Yes.
how am I going to get mine opened? That's you didn't show
Okay.
us.
Okay. I was trying not to dwell too much on the account, the registration and login. You understand? That's why it's like that. Okay, so for you to log in is not difficult. Like I said, once you have opened the account, your account details will be sent to your email. So did you get that? Did you open
Yes,
the account?
I got my email. I got the details. Yeah, I've
Are
been able to
you
do
using a
this.
phone? Are you using a phone
I'm
or a
using,
laptop?
I'm using a laptop. I'm using a laptop. Been able to do
So
this,
can
but
you?
for the sake of others,
Okay.
that
I quickly said that. Maybe you're only paying attention. I said you go to your navigator, which is your Control N. Okay. You go to your navigator, which is your Control N, and you click on accounts. Okay. So you click on account, you right click, and you say you now click on log into a trading account. So this is where a window will pop up. You now input your account number and the password sent to your email, and make sure the server is a real Inveslo real if it's a real account, and Inveslo demo if it's a demo account. Then you now log in. So I mean, I'm already logged in. So this is what we now get. Does that make sense? So I believe I've answered your question. Thank you. So once you're logged in, you'll be getting feeds to the live account. Now, funny enough, for those of us who are completely new, we assume not all of us, this is a master class. For those of us who are completely new, by next week, we'll be starting a basic class training from the scratch. So if you're feeling lost, please just stay on the call. Don't leave, as subsequently you will still learn something. And subsequently, when the basic section is now taken, it becomes easier for you. So stay on the master class and learn one or two. Okay, for those of us who are complete novice. So for the essence of this class, the first thing I'm going to do is I'm going to change the background of my screen to black and white and change the candlesticks to green and red candles, green for the buy, red for the sell. So just for a recap, I said go to your properties and change your background, your color scheme to black and white. You'll just be touching only bar or bar down, bear candles and red candles. Then once you're done, you can, in order not to be doing this repeatedly, you can simply save. You save the templates as clean or clear. Whatever, you can also save it with your name. So I'm going to save this with Inveslo. Okay. So anytime I load a new chart, and let's say, for example, I'm opening GBP USD for a new pair, all I just need to do is load Inveslo 1. So I have a clean chart. So let's dive right in. So we already defined support and resistance as areas of possible areas where prices for support, area market could likely buy, and resistance as areas where market would likely sell. So I'm going to teach us a very conservative and helpful way, one of the easiest way to identify support and resistance zone. So what we'll do is you can actually draw your support and resistance. The conventional way everybody knows is I'll just look for regions where the market have tested before, like I can pick here. Okay, I can pick here as a level. So this level I picked is, the market is here, it's functioning as a support zone, while here is functioning as a resistance, because this level is functioning as a support because the market bought from here. The market was buying from around this zone, and it's functioning as a resistance zone because it was selling from this zone. All right, so that is the conventional way everybody draws their support and resistance, and they just pick up lines, the horizontal line, and start dropping levels. All right, but for the essence of this training, I'm going to teach us a more logical way to draw support and resistance. So let's pay attention, and so that I'll be able to repeat all that I said. And for our benefits, this section is being recorded, but still pay attention and learn. All right, so the first thing I'm going to do is I'm going to use a theory called a quarter theory to draw my support and resistance. So I'll be dividing the market into 1,000 pips. A starting point will be a whole number. Why I'm doing this? Because we are dealing with money, and prices we test regions that are in whole numbers. So I'll look for when GBP USD, GBP was equal to $1, when £1 was equal to $1. That's where my first level would be. Okay, where £1 is equal to $1. Now, the next thing I'm going to do is, first of all, always note that you're going to be drawing a support and resistance from the monthly time frame. So for this support and resistance, I'm going to do just 2 examples. So let's follow suit. I'm going to do GBP USD and Euro USD. So my next level is going to be 1,000 pips apart. Okay, it's going to be 1,000 pips apart. So 1,000 pips is equivalent to 10,000 points. So between 1.0.
Sorry, sir, we can't see your screen.
To 1,000 points. Coming. Please, if you can see my screen.
Yes, sir, we can see it now.
Okay. Oh, sorry about that. I thought we've been following. Okay, so as I was saying, can we see my screen?
Yes, sir, we can.
Yes, your
Yes,
screen is visible.
We can,
Okay,
sir,
okay.
but you could bold it a little more, sir.
Can we see it now? Is it better?
No, sir, we can't see it. We can't see it. It's off. Now we can see it.
Okay, I think it's better now.
It's better now.
Yes, sir.
Okay, excellent. Okay, so saying all we just need to do is I'll pick my first level as a whole number, like I was saying previously. We are dealing with money. We're not just dealing with what numbers. So the first line I dropped, I said it's where £1 was equals to $1. So from that level, that's my starting point. The next level I'm going to pick is going to be 1,000 pips apart, which is equivalent to 10,000 points. So the next level is now going to be around 1.1. Okay. The next level is going to be what 1.1. So that will be the first. That will be the first levels I'll be picking on the chart. So I'm going to divide my chart by 1,000 points. So the next level will be what? Automatically 1.2. Doing it this way will clearly outline all the levels. That's why I was reducing my screen, because we just want us to be bold. So you will notice that the level I just dropped 1.2 picked other levels perfectly. So the next level I will add is 1.3. That way, you will not be stressing yourself trying to find the levels, because this 1,000 pips apart will simply pick out the levels for you. So my next 1,000 pips will be what? 1.4. This way, and like I said, it's better you start it from the monthly chart. So I can go on, and the next level automatically becomes what? 1.5. That is why it looks like my screen is small, because I am casting from the monthly time frame. Whenever you pick your horizontal line, ensure to double click on it so that it will not be moving. So once I'm done, I can keep going up to 1.6, 1.7, but we are considering the last 4 years, 1, 2, 3, 4. That's the level I'm considering. So once I've picked the 1,000 pips apart, so I can now argue that this zone here becomes my major support considering the last few years. Then this becomes my major resistance. But also notice that as the market, notice how the market reacted in most of these levels that we just marked. All right, so each time the market tested, this was in 2017, the market got here and the market started what to sell. The market got here and the market started to buy. Market got here and started to sell. So this was like way back 2014. So this level automatically becomes 1.6. So it becomes easy for you to draw these levels. The other major resistance here becomes 1.7. So anytime, and one thing you need to note is each country has their benchmark. So especially if you know the benchmark of a country, that benchmark is more like a price where the CBN fixed. That is the official exchange rate. For example, the benchmark for Nigeria 2025 under review is $1 is equals to 1,500 naira. So anytime the dollar gets to 1,500 naira per dollar, you see price starts going back up again. If it gets to 1,600, it starts coming back to 1,500. Currently it's around 1,530. So that is what benchmark is, okay? So anytime the currency gets to that price level, so these levels are like benchmarks, okay? Now, after you've drawn your major support and resistance, which function, so these all numbers function as major support and resistance, and we can see how prices react. But sometimes these prices cannot hold water when you now drop down to a lower time frame. So how do you now draw? See, I just dropped to the daily time frame, and see we are seeing only one level, which was 1.3. So I'm going to, in order for us to see more levels that we can pick as our support and resistance, we will now divide this 1,000 pips apart to 500 pips. Okay, so the next levels will now be 500 pips apart. So 1.1 to 1.2 will give us 1.15. You can use your crush head to measure if you're not very good at mathematics. Okay, so all you just need to measure it, press your crush hair, which Control F if you're on your system, then you left click on the 1.1 and drag up. So you'll be looking for 5,000 points, which is equivalent to 500 pips. Are we together?
Yes, sir.
Okay, so like I said, if you have any question, please just ask, okay, and I'll do well to answer them. Okay, I'll do well to answer them. So if you have any question while the class is going on, please do well to ask. Then the next level again is I'll repeat the same action 1.2 between 1.2 and 1.3. I'm going to get 1.25. Now these levels I am drawing is now referred to as your mid number. Remember, we started with 1,000 points ahead, and I said for you to get it right, start from a whole number. You can start with 1.0 for almost all the pair. Then you now gradually grade it up to 1,000 pips apart. That is where we started. Just a quick recap. So I just drew 1.35. So if I now drop down to the daily time frame, if you're a day trader, you'll now see that we now have more levels to react from. Previously, we were showing just 1.3, but currently now we see that the price is around 1.35. Within this 1.35, the market can now function either as a resistance or as a support, depending on the prevailing economic conditions at that time. Okay, so, and the last but not the least, to easily catch your key levels, that is for people who are day traders. So I'll be having 1.45, okay, 1.45. So I've been able to get many levels without stressing myself. So this is the simplest way to pick your support and resistance level on the charts. Now, but you notice that I just dropped down to a lower time frame. And even if I drop down to the 1 hour time frame, I'll be seeing only 1.35. You see, now this becomes a source of concern because you can no longer pick level. So for you to be able to now see levels that are visible on the lower time frame H4 and H1, especially if you are a day trader, to know if you are at its current support and resistance zone, is you will now divide a whole number and a mid number to give you the so-called quarter number I mentioned earlier, which is now, remember, we started from 1.3 to 1.2, give us 1,000 pips. So between this 1.2 and 1.3, we have 1.25, which is 500 pips apart. So to get our mid numbers again, we'll just divide 1.2 and 1.25. We'll be having what? 500 pips divided by 2 will give us 250 pips, which is now what? 2,500 points. Okay, so that is what I will now use as my final levels if I am a day trader. So this will give me 1.225. You can use your calculator to do the division if you are not that very good. So this will give me 1.275. And this will now be the final numbers I am adding. Now, why I love this is it becomes more systematic when you simply do this, and it makes your work and chart more orderly and very organized. Okay, instead of just drawing up lines at random. So I just added all my quarter numbers. So at this junction, this is where I end the chart. So if I even drop to H4 right now, you will now see that I am currently at a mid number. But remember why when H4, we didn't see this level before. We didn't see this level before. And you can see how price reacted to this quarter number. You can also see how this price reacted to this quarter number. So you begin to now see here that there's now a resistance around here, and it dropped down all to this support zone, and it's currently around the mid number. And so we know that I can now analyze that GBP/USD is simply either buying back to, if dollar remains weak, it's buying back to 1.375. If dollar becomes strong, it's coming back to 1.325. Okay, and it's at this level that I can now possibly react based on the prevailing economic condition and the candlestick formation. Okay, so far, do we have any question? Do we understand the whole support and resistance zone, how to pick? So I'll just do a quick recap. Okay, F Young is raising his hand. Please go ahead and ask your question, F Young. You can unmute yourself and ask. Okay, if F Young is not ready, please, Kingsley, your hand is raised. Please go ahead, Kingsley. Or better still, you can drop your question on the chat box and it will be attended to. Okay, any other person? We have Melo raising his hands too. So please go ahead, Melo. Okay, we have about 5 persons raising their hands. Please kindly unmute yourself and ask your question. Thank you. Kindly unmute yourself and ask your question. Okay, Peter, go ahead.
Good evening, sir.
Yeah, good evening.
Please, from the chart, I can see that the chart is very good. But what I want to understand is this calculation of people. At the point, when the meeting was going on, it showed me a notification that the host has dismissed the call. But when I joined back, I met it at this stage. I followed very well to this stage, but this calculation of the PIP is what I don't know how you got this line out, because this is my first time of using MetaTrader 4. So if I can understand
Okay. Thank you
I'll be
very
able
much.
to get
Recap. Okay, so Peter said he was lost. Sorry about that. So just a technical glitch. That's what cut off the call, and we got back immediately. Okay, go ahead, Sandra. Okay, F Young. Okay, go ahead. If you are unmuted yourself, go ahead and ask.
Good evening.
Sandra said, evening.
Good evening. Sorry, I'm having the same issue this Peter just about. Last person just made complaint about. I'm having the same error.
Okay, no problem. That's for those just joining the call again. All right, so what we're going to do is I'm going to restart again. Okay, Sandra said he got lost from where he was creating the account. So this call is being recorded and will be uploaded on our platform. So just get yourself available to rewatch. All right. So, but that said, we just finished dealing with GBP/USD. So it's going to be the same process for most of the pairs. So we're going to repeat what we just did with GBP/USD and repeat it for EUR/USD and see if we have enough time to deal with candlestick formation. The candlestick formation is now a confirmation that if a support zone will buy or if a resistance zone will sell. Okay, so we're going to open our EUR/USD. I'm going straight away. So like I first mentioned, start drawing your levels from the monthly time frame. And I said that the best way, instead of drawing your lines randomly and confuse yourself, the best way to draw your support and resistance is using what we call the quarter theory. It's not a big issue. It's not a big deal. What I simply mean by quarter theory is we are dividing our charts within a range of 1,000 pips apart. And we're going to divide that 1,000 pips into 500 pips. Then the next level, last level we're going to pick is the quarter level, which is 250 pips apart. Now, to calculate your pips for Mr. Peter, is you press Ctrl F. Okay, press Ctrl F. Can you see my screen? My screen. There's a cross sign there. That is your crosshead, and it's called. You can bring it on the chart using Ctrl F. But if you're using a mouse, just press your cursor and the Control F, your crosshair will appear on your MetaTrader 4. Now, once that appears, I first of all say the best way to start your first level should always be a whole number. Okay. And I like starting from when €1, just like we did for the pounds, when £1 was $1. We're also going to be picking when €1 was $1. That will be my first level. Okay. So your horizontal line is under your toolbox. Draw a horizontal line. Can we see that under your toolbox? Or you can click on Insert if you're lost. Click on Insert. Then you can now see lines. And you pick your horizontal line any which way. Okay? You pick your horizontal line. Then you make sure that levels, to pick the levels more accurately, you double click on the line. So notice what I'm doing. I'm double clicking on the line. I will now take my cursor and right click on the line. I will now go to horizontal line properties. Then it usually is in common. While it is in common, you can pick the style. So I'm using blue. I can change it to black depending on the color you love. Then you can thicken the lines a little. But if you don't want thick lines, you can actually use broken lines depending on what you want. So because it's I want everything to be visible, I'm making my lines very thick. Then I will now go to parameters and I'll input the value that I want. So I will have 1.0. 1.0 is something as 1. That is how I arrive my line here. Okay, does that make sense now? So if you're on your chart, you can actually practicalize this right away, please. Okay, I'm trying to be a little bit fast because of the time schedule. Okay, so I'm double clicking, and this is that is how, once you drop the line after modifying, you will now double click on it again so that it will stop moving. So after that is achieved, from this 1.0, I will now drag my line up to look for 1,000, 10,000 points. So once you're using your crosshair, just a quick one, because some person said that just using the MetaTrader 4 for the first time. The MetaTrader 4 is just giving you a little information. Okay, as I was saying, the MetaTrader 4 gives you information about price and time. Okay, so that you understand. The MetaTrader 4 is simply giving me the information about the price and the time. So the MetaTrader 4 gives us price and time. So this is a price here, and this is a particular time. Does that make sense now? So that's what the chart is telling us all about. So when I press my cross here, I can now calculate from here up to the information the cross here is giving me is the first information from my right hand side is price, while the next information is now the PIP value, but it's actually in points. Does that make sense now? So I'll be looking for 10,000 points. My 10,000 points is what is equivalent to my 1,000 pips. So it will give me 1.1 automatically. So my next line here should be around here, which is 1.1. Since I cannot get 1.1 exactly, I'll right click on the line, go to horizontal line properties. Then I will now go to parameters and now input the 1.1. Then again, I will double click on the line in order not for the line to move. So the next level will automatically become what? 1.12. All right. So each level, each currency has their 1,000 pips difference. On GU, it was 1.1, but here, the 1,000 pips difference is now what? 1.2. That will now be my next price level. Okay. So for the essence of this class, we're not going to do much. You can actually keep marking more levels if you want. Okay, but just for this class, we're going to consider just we're considering where the price range is. So once this is achieved, if I will now drop to the weekly time frame. So currently I am on the weekly time frame. Now it's not all the levels we picked, because like here, price was buying here. So we need more levels to be able to identify where we are buying or selling from. And the best way to do that is to divide these major levels. So these are our major lines, the 1,000 pips. So you just divide the 1,000 pips by 2, which will give us 1.0 plus 1.1 divided by 2. It will now give us our 500 pips level, which is 5,000 points. You pick your horizontal line and add it. So it will give us 1.05. I believe we're paying attention. If you currently understand, Mr. Peter, please state it on the chat that you do understand. Sandra, if you are following, please just comment on the chat that I now understand. Please, I need response. Do we understand? Are we following? Please comment on the chat box that you do understand. Thank you. Comment on the chat box that you do understand.
Yes, we understand.
Okay, excellent. That's awesome. So the next level automatically becomes 1.15. So you will now begin to see how price reacts to these price levels, which are now functioning as our support and resistance. So this is what we refer to as the mid numbers. It's 500 pips apart. It's referred to as what the mid numbers. Once that is achieved, I can now drop down to my lower time frame. If we drop down to the lower time frame, a lot of levels are going to be missing. You see, we are seeing only one level, and we need more levels to trade as day traders. So that is where we now have a quarter number, which is 250 pips, which is dividing this level and this level divided by 2, while 250 pips apart. So that will now give us, we can use a crochet to measure, to divide it to give us 1.125. If you don't know how to use your crochet, you can actually use your calculator to do the division. It's not that difficult. You just simply add the last 2 lines and divide it by 2. Okay, and divide it by 2. So you can see now that we now have better price levels to either trade from. So currently, Euro USD is currently at a quarter number. On the lower time frame, sorry about that. On the lower time frame, we can see that price is now approaching a quarter number. So once price approaches, depending on the candlestick formation and the prevailing economic condition, the market can now choose to react around that zone. Does that make sense now? That is how support and resistance work. Okay. Okay, excellent. So I believe we now understand how to draw support and resistance. And the best thing we can do, in order not for these lines not to vanish, you can resave it as a template. You can save it as a template so that you will not be adding them all the time. So all you just need to do is simply go to your, I've already done that previously, but for those who just joined, go to your template here, or you can right click on the screen, you will see templates. Then click on save template. So this is Euro USD chart. I'm going to save it as Euro. I'm going to save it as Euro USD. So once I do this, anytime I close my laptop and I open a new Euro USD chart, instead of repeating all that I've done, I'll just right click on my screen, go to template, and I'll load Euro USD. My chart comes back to me. All that we have done comes back to me. Does that make sense? So And with this brings us to the end of support and resistance. So I will go ahead and talk about the shift candle. I want to believe with this, we know how to we understand what support and resistance is. It's an area where you can buy for a support, and for a resistance, an area where you can sell. Then we used our horizontal line on the chart to identify this support and resistance zone. TG, Madu, please go ahead and ask a question before we move on to shift candles. I want to believe the thumbs up we're saying people understand, you guys understand all that we've said. So TG, go ahead, ask a question. You're raising your hand. Like I said, you can actually type in your question and it will be answered. Okay, Chidi, just like TG is busy at the moment, so I'll go ahead and explain what a shift candle is. Now, to start with, TG, we cannot start all over from the beginning again, and this section is recorded, so do well to look for the recording and watch. Thank you. We'll just go. So this is a new topic, but it's still it's still going to be a confirmation of what we've been doing. So pay attention and learn. Okay, just pay attention and learn the next thing we're going to be doing. Thank you.
Okay.
So the next thing we're going to be doing is what we call the shift candle. Okay. Okay, so we're done with support and resistance. So shift candle is isn't widely, the term shift candle isn't a widely standard, but it's closely tied to the concept of a market structure shift, which is well organized. So a candle market structure shift implies a change in the trend direction. So what that means is if the market is buying, it means we're anticipating a sell. And if the market is selling, it means we're anticipating a buy. So it's typically marked by a key candle reaching a recent high or a low and closing beyond it. So shift candle price breaks and close above a previous swing low during a downtrend, suggesting a trend reversal upward, while the bearish shift, the price breaks and close below a prior swing high during an uptrend, signaling a shift in the bearish trend. So I want to go back to our chart so that we'll try to comprehend what we just said. It's not difficult. So I'm gonna share my screen again. MetaTrader 4 so that we understand. Now we just finished. Please, somebody should help me mute everyone. Thank you. Someone should help me mute everybody. I believe we can see my screen. We can see my screen. Just simply say hi.
Yes, we can.
Okay, excellent, excellent. Okay, like I said, if you also have a question, just type on the chat box and I'll see it and I'll reply. So now, we just mentioned that candlesticks, first of all, I'll quickly define what a candlestick is. Some of us are already traders there on this call and we know what candlestick is. But I'll just do a quick definition. Candlestick is just graphical representation of price on the chart. That is what a candlestick is. It's as simple as ABCD. So it has an anatomy. It refers to a candlestick. It just gives you the data, graphical representation of price on the chart, like I earlier mentioned. So, and the anatomy is simple. A candle is characterized by just 4 things. A candle has an opening price, a closing price, a high, and a low. So for a bullish candle, a candle is referred to as bullish because the opening price, this is a bullish candle, is either a bullish candle or a buy candle, okay? is referred to as bullish because the opening price is at the bottom and the closing price will now be at the what? The top. The week is refers to as the low, while the week here is refers to as the what? The high. And this is now a bearish candle because the opening price is at the top here. It's now going to close at the bottom. The week here remains the high, while the week here remains the low. Okay. Now that is what your candlestick anatomy looks like. So we have only two types of candles, either a buy candle or a sell candle. Although we have a lot of different names of candles, the list is endless. We have candle, engulfing candle, pin bar, morning stars, piercing candle, kitchen candle. The list is endless, marabuzus and the rest of it. But to simplify this candle, for me, only one candle is important in identifying if the market will buy from a particular zone or if it will sell from a particular zone. And that is what we defined as the shift candle. Somebody is asking which is the main one. The main one is what we are learning today, which is referred to as the shift candle. Okay, does that make sense? Okay, so I'm going to explain the shift candle. From what we said from our definition, a shift candle is the one that helps to identify a shift in momentum. Okay, that the market is now about to change direction. So how do we identify a shift candle? A shift, so we have either a bullish shift candle from what we just read and a bearish shift candle. Now this shift candle can help in telling that the market will reverse or the trend will likely what continue. So I'm going to quickly identify one. So I'm already seeing a shift candle here. So I'm going to zoom out my screen so that we understand what a shift candle is. So a shift candle is where both the high and the low of the previous candle is completely covered. So I'm going to explain that again so that we'll see a typical example. At the course of this training, I explained what a candle anatomy is. We already know that the candle is characterized with the opening and close. Each candle has the opening price and the closing price. Okay, and we already know that the bullish candle, the opening is at the bottom, while the closing is at the top. For a bearish candle, the opening is at the top, the closing is at the bottom. So this is a shift candle is now where a bullish shift candle is where the low of this candle is lower than the previous bearish candle, while the closing is now what's higher. Okay, so this is a typical bullish candle. Notice that this market is already what the market has been selling for a long time, and it hits our what this is a mid number 1.15 is a mid number. Immediately price go here, you notice that the market was still selling. I don't want to mention the name of this candle because it's inconsequential to this training. So a shift candle, I would prefer a shift candle to occur before I will now join my buy. So what is a bullish shift candle? So we're identifying a bullish shift candle first and what foremost. So a bullish shift candle is where the low of the current bullish candle is lower than the last bearish candle, and the close is still higher than the high. So this here is our what? This here is our shift candle. It signifies a shift in momentum. And once this now occurs, I can join the buy here because I'm around a support zone and I now have a shift candle. I can now join the buy. My stop loss is here by 160 pips, and I'll target what? 200 pips, which is 1:300 what? 300 pips, which is 1:3 what? 3. And the market is still what? Buying since that time. So I'm going to explain the bearish shift candle. We have two types of bullish shift candle. Okay, so notice here that after the shift candle occurred here, can we see another shift candle here? This tells me that this buy will continue. So this is even a double shift candle, which is a double confirmation. We can see again that the low of this bullish candle is actually lower than this bearish candle, and the close of this bullish candle is also higher than the high of the bearish candle. This is now another what? Shift. So this completely tells me that buyers are now in control of the market, and this sell has ended. This becomes my support zone. So I can also join the buy here and use it as my stop loss, 90 pips. And this market has already done 100 more than, if I have joined here, my stop loss was 90 pips. Market has already done 140 pips. All right, that is a bullish, that's a bullish shift candle. And even in the direction of the trend, if you see the shift candle formation, it helps you in okay, I'll zoom out. I'm using a laptop and you're using a phone. That is why you are not seeing my screen very boldly, but I'll still zoom out again so that you see. I believe you're seeing better now. Olumide Desmond. Can you see better now? Okay, so you're asking what is pips. Now for pips, TJ Madu, I already answered it previously that from next week Monday, we're going to look for a way to start a series on basic class. Okay, this is a master class, and just make yourself available for that basic class. Okay, thank you very much. In that basic class, we're going to explain what is pips, what is lot size, what is ask and bid price, and all the basic things you need to know. So just make sure you are registered. You can go ahead and even fund the account, and that will qualify you for a free mentorship. All right, so but still stay on the call and learn. It's important you stay on the call and learn. So as I was saying, to identify a bearish shift candle, this is a bullish candle. I already defined what a bullish candle is. So the low of this candle is lower than this bearish candle, and the close is also higher. So this is another bullish shift candle. This tells me that this market is going to keep buying. So this is even another region. I can join this candle, and my stop loss will be 60 pips. And okay, the market, even though this market is ranging, I can easily tell the direction where this market is headed. Does that make sense now? So anytime you see a shift candle at a zone that you marked, it will now function as a possible entry for reversal. TJ and every other person who are coming later to the call, please go ahead, subscribe to Inveslo YouTube channel or Inveslo channel on YouTube, and this is where the video will be uploaded, and you can rewatch this section. Thank you. Okay, so this zone is functioning now as our resistance. Okay, so I'm trying to look for a perfect bearish shift candle to use. So this zone is now functioning as our resistance because it tested a quarter number 1.175. But when it got here, you notice that price kept ranging. After a long term of buy, we can see shift candles around this zone that have been pushing this market upward. Now, let me just finish with all bullish shift candles before we just go to bearish. Notice too that in this uptrend, we can see that this shift candle, this bullish candle, completely engulfed this bullish candle. This is now a bullish shift candle, bullish shift candle. So even if you missed the buy from here, this tells me that this will likely continue to buy. So it's a very powerful confirmation. For me, it's the best candle I can take. I'm using H4 time frame. Thank you. Euro USD H4. I'm using H4 time frame. But this is practicable on any time frame. All right. The rules are practicable on daily time frame and weekly time frame. Is depending on the time frame that you saw the formation. That is where you would use it. So if you're a position trader, you stay on the H4 time frame and work. So I'm going. Let me go to D1 and so that you understand. Now notice that when the market tested, this was the level we were watching previously. Can we see that now? So if you notice, we have a bearish shift candle here. Okay, this is an armor, but if you notice, this high is higher than this high, and the close is lower than this close. So this is a bearish shift. You can now see that this is daily time frame. Immediately this happens, and this is now a key zone, your point of interest where you're looking to sell from already. You can now join your sell here. You put your stop loss above the previous high, which is 100 pips. You target at least 1:2, which is 200 pips. And the market sold more than 350 pips. So you can see how powerful a candlestick formation is. Now, after that happened, you can see the market tested a mid number 1.15. Can we see the shift candle here? This low is lower than this low, followed by the close is higher. So this is what has been pushing this market up. Okay. Now, I'm looking for another bearish shift candle. Let's see if we can get one at a very good resistance. Good. So we have, this is a resistance. I'm no longer on H4 now. I'm looking at this from daily so that you can see that this can be identified on any time frame. So we have a bearish shift candle where the high is higher than the previous high and the close is lower than the previous close. So this gives us a bearish shift candle. It's very easy to identify, very easy. Okay, so this becomes an entry for a sell at 120 pips, and you see the market dropped over 700 pips. Now the beauty is, while this market was selling, you can identify. Please, somebody shall be mute everyone. Thank you. You can identify shift candles. So even after a pullback, you will notice that there's a bearish shift candle for this sell continuation. This is also another bearish shift. Okay, you can see this high is slightly higher than this high, the close is lower than this close. So this is a bearish shift, and the market continued to sell until we got to this major support zone, and boom, for the market downwards started to start buying up, and that's how it works. Now this is Euro USD, so let's check our GBP USD. Okay, so I'm going to zoom out my screen for us to see clearly. And please, if you are following, comment if you are lost. Okay, so good. Now we see that GBP USD have been buying for the past 4 weeks. GBP USD have been buying for the past 4 weeks, and this is from a support zone. And we see that. So the mistake most of us do is, this is how some of us lose money. Okay, so the market hits a support zone 1.235. We jump in the buy and set a stop loss of maybe 50 pips. It comes, hit our stop loss, we lose money. Then we'll come back a week later. GU is wicked, it has hit my stop loss. We'll come back a week later and we see that the market has bought over 500 pips. Now begin to wonder what happened. Okay, that is one of the worst bad experience you can experience as a trader. You take a trade, hits your stop loss, and it starts to buy. You now begin to wonder what happened. So the best confirmation you can use at a support zone is this shift candle. All right, so we can see this is now a bullish shift. After hitting this level, we can see the low is lower than this bearish, and the close is higher. So this becomes my entry point. Stop loss is 150 pips, and the market has bought over 500 pips since that time. So currently the market is ranging, but even in that range, when it broke this level 1.35, which is a mid number, can we see the shift candle here? that confirmed the sell. So this is another problem. When you get here, you want to sell. So, but if you have to come again and hit your what stop loss. But if you are waited for this shift candle, if you are waiting for this shift candle, you can join 60 pips and enjoy 150 pips. We're going to go to the daily time frame, and we'll now see this is a perfect shift candle. So the assignment for yourself this night, I want us to go to our chat, whatever WhatsApp group or Telegram group you're in, identify shift candles, draw support and resistance, and identify shift candles and post them on the group. Okay, I'm in all the groups and I will comment on them. Okay, so if you are following, if you understand the shift candle, please just simply say I on the chat box. We're coming to the end of the training, and please just comment. Okay, TJ said he's lost. Okay, hi. A lot of persons are following. So TJ, you're a beginner. That's why you're lost. So get yourself ready for our next section, which will be for basically for beginners. Okay. And to qualify, you would. Okonko said he's lost. Okonko, are you a beginner or? Please mute yourself. Thank you. Let's not move like I'm hearing myself.
I'm a beginner.
Okay, so get yourself ready and attend to the class.
Okay, sir.
Okay, so I want us to, this strategy is very simple. Tomorrow we're going to just have one confirmation to the fifth candle, which is divergence. And which is divergence. And and you can now use this as a strategy to enter the market and you will make money. It's, the shift candle is very, very easy to identify. Drawing the support and resistance is also very, very easy to draw. So I want us to go ahead and practice either on phone or on our laptops, draw your support and resistance using the 1000 pips theory, followed by 500, followed by 250 pips. Then identify if the market hits a level. Check first of all if there's going to be a shift candle. So if it hits a new high, you check if there's a shift candle before you resell. Like here, this is a typical example. You can see here, this was what? A shift candle. That was what sold this market here. And when the market hits another level, we had what? Another shift candle that made the market to what? To buy. We can see how practical the shift candle works. Okay. Okay, thank you, Mrs. Joel. You say you understood the shift candle. So we're giving ourselves our assignments and practice. So apart from shift candle, is there any other candle we can use for proper confirmation? Okay, now for me, shift candle is the best, and that is why I'm explaining it to you. Okay, if you can go and do research, I started at the beginning of the training that we have a lot of candlestick formation. I definitely chose this one because it has proven to be more effective. All right, so this a link to our Telegram channel, our YouTube channel, I just posted for you to rewatch this section. Please kindly go ahead and follow us on YouTube and watch the video once more. Then follow us on our WhatsApp community and Telegram. I'm going to quickly drop the Telegram link so that if you have any question, you can drop your assignments there. If you have any questions, simply ask, and I will do well to answer. I will do well to answer the question. So if you have any more questions, please go ahead and ask as we draw to the close of the section. Tomorrow, please, let's come on time. The class we're going to start by 7 p.m. where we'll be treating divergence, and we'll learn how to fund our account and start taking trades. In our community, we drop more educational content. We even drop signals for us to trade and trading ideas that can help in your trading career for you to make money. Thank you very much. So any other question? Any question, please ask your question and we'll do well to answer. Okay, thank you very much. Okay, I just dropped the Telegram link. I'm going to drop it again, TJ. So please join. This is the link to the Telegram channel. I'm also going to drop the WhatsApp channel so that we can join. So I'm dropping a link to the WhatsApp channel right away so that we can join.
Can I ask a question?
Go ahead. Guys, this is the time for questioning. So go ahead and ask your question. Thank you.
All right. It's more or less like a personal opinion. I stand to be corrected because most of the time when I come across such events like this, right? And at the end of the day, I ask myself, why do we use past events or past tradings to train or to enlighten newbies? I've tried, okay? I've been part of something like this, but at the end of the day, I discovered that the market still doesn't go as, like I said, it's a personal thing. Maybe I need a one-on-one, you don't have to answer the question here, okay? So it might be something we can get to talk about later, but I am of the opinion that most trainers, they do that using past events. I do write programs, okay? And personally, I do write some bots, but even those that give those trainings, they still dwell on past things. Why is that?
Okay, so I'll answer your
Yes.
question quickly. I'll answer your question quickly. How long have you been trading for?
Well, I've been trading for 6 months now.